Alright guys, welcome back to the channel. As I'm filming this video, altcoins are taking a dump against their BTC values, starting with ETH down 3% versus BTC. And as you can see from many of the other altcoins that I track here, you got some reasonable single digits and in some cases some double digits here with your meme coins. So you might be wondering, why would anyone be looking at triggers for an altcoin season when the market is dumping? For me, my own style of analysis and investing, trading, I like to look at things when others aren't looking at it. And generally with retail, when prices are down, retail traders that is, they tend to look the other way. They think the game is over and they basically work their portfolio day to day. I'm looking at things on a week to week, month to month basis. So hopefully you're finding some value from that. And if that's your style, definitely subscribe to the channel, especially if you are new here. It's your home of macro cycle analysis. I cover everything from Bitcoin, cryptos, the stock markets, commodities, and the real estate cycle here. Been investing for over 18 years, trading since 2010, and of course into Bitcoin since 2017 in that ICO run of the old days. Links in the video description. We have a sale on TIA Premium that is coming up today. So if you want to get involved with that and join TIA Premium members, check out the link in the top of the video description and subscribe over there right here. So let's start it off with the agenda today. We've got some Bitcoin to get through. I've talked about the Christmas sale for TIA Premium and the indicator suite. You'll see more of that on your emails. But more importantly, I want to have a look at the cycle itself because we're starting to see a few things change. And it might not be straight away because we are looking at an 18-year cycle and you're not going to get those signals straight away to let us know that the market has topped, the bell has rung, and it's time to sell out of everything. These signals will take months to appear on the charts because of course you've got roughly 14 years up and roughly 4 years down. Sometimes it extends to 5 or 6, sometimes it's as short as 2 or 3. But when you're looking at longer term cycles, you need to have that tolerance in your views. So we are still seeing things heading up. However, I am beginning to see a few extra bullish pieces out there from some of the well-known banks and other hedge funds and analysts and investors and all sorts, right? Only in 2022, 2023, a couple of years ago, a lot of these targets for the end of year were very low and they were actually lower than where the market was currently sitting. So, you had 2023 and basically people were looking for an absolute crash, absolute massive recession, and the game was going to be over in 2023 and we had to wait multiple years. You might remember we heard about 10-year bear markets from this 2022-2023 low saying that we were going to have a lost decade. Obviously that was entirely wrong and the chart was showing that it was most likely going to be extremely wrong. And from that point, we've seen the market go up. It's been 20 odd percent in 2023 and 20 odd percent in 2024. And now we're beginning to see these guys, Bank of America, Barclays, Morgan Stanley, Goldman Sachs, Deutsche Bank, Wells Fargo. They're all giving us these huge targets to the upside for the S&P 500 for the end of 2025. So I'm starting to get a little bit concerned with the end of the move. However, I'm not at all saying that this is the final top in the markets or in Bitcoin or cryptos. What I'm saying is in this winner's curse phase, you generally, at least from what I've seen in the history that I've read, there might be 1 or 2 years. In the case of the 1920s, there were multiple years where everyone, like retail, was right. They got into the market and it kept going up for 12 months, maybe 18 months, and then things came crashing down. It might seem like an eternity, especially if that's the first time you've been in the markets. But when you look at the cycle and you get a reading of how long it's been going on for, how long the bull market has been up for, you can put the percentages together and realize that 12 months out of, in the case of the S&P, it's been up for 15 years, but that would take it out to 16 or 17 years, depending on where the peak comes in, whether it's 2025 or 2026, maybe even 2027. That could be an 18-year run. 1 year out of 18 is a very short period of time in terms of percentages. It's less than 10% of the time that the public, I guess, the retail, the dumb money that they call us, is right in the market. But that time always comes in these cycles. People are always going to be right towards the end. So maybe we are on the verge of this sort of everyone being right Or to the flip side, I guess for the more pessimistic outlook folks, they would say that this could be absolutely crazy, that everyone is now bullish as opposed to where they were bearish. You just have to do a couple of Google searches, look at what they were forecasting for 2023. There was a huge discrepancy between what these analysts and banks and so on, the analysts at the banks were seeing for the end of 2023 forecasts. You can read what they had here. And of course, the end of 2023 finished at 4,800 points. I mean, it was a few points shy, 4,770, but you get the idea. 4,800 points for a round number. Morgan Stanley, 3,900. Citibank, 3,900. Neutral outlooks was still, Bank of America, 4,000. Goldman Sachs, 4,000. That was still 20% off where the market sat. So I'm not saying that I can call the end of the year. I'm not saying I know exactly that it's going to finish at 4,800 points, but as well, I'm not Goldman Sachs, valued at billions and billions of dollars, with a huge team of people feeding me info to come out with some sort of ridiculous forecast, which was way, way wrong. The only clear one that got anywhere near it was Yardney. And some of the data we've seen from Yardney before has been relatively all right. No one's perfect. I'm not perfect. But, 4,800, not a bad target there, depending on when they reassessed their target, because some of them do reassess their targets along the way. So that's my outlook here for the 18-year cycle. I'm starting to get a little bit concerned. Cautiously bullish is the best way to put it. Bullish means up. I'm still on the long side of the market. I still think it's going to go up, but now I'm getting cautious because how many more people are joining me at the party? I don't want more people at my party. I'd rather be on my own here for as long as possible while the things keep climbing. I'm enjoying all the free food, but now there's too many people coming to the party, and I think all of the freebies are going to disappear. A lot more people are thinking that the party is just getting started because there's still a lot of food left. It was just me here and I was enjoying what I had, and there's a lot of free alcohol because I don't really drink much. And now they're all going to come and take those gains. So it means that we'll have to start leaving the party sooner than everyone else, which means we're not going to be there at the peak for the party. Maybe we are. We don't know for sure, of course. We don't have that crystal ball. But ideally, we start to take some of those profits home. Maybe we start stuffing our bag full of leftover foods and take a few drinks for later on. You get the analogy, right? So that's the S&P that at least the cycle that I'm seeing at the moment. I thought I'd have a bit of fun with the analogies today. The S&P 500 did have a down day for the S&P 500 index. However, the futures market was a new all-time high, and that's because of the contract rollover. This futures market continues to roll every 3 or so months, and basically what that means is that traders are exiting positions and then entering the new contract, and the new contract is now March. So they have that 3 months. If they don't want to take cash settlement for their position that they're in, they have to sell and then buy it into the new contract. Don't worry if you don't understand that. We'll just keep following the charts, and that's why we have a new all-time high for the S&P 500 E-mini futures, whereas the SPX is not at a new all-time high, and that's the same for the Nasdaq futures. And as for the the spot Nasdaq, that was still up because a lot of the tech stocks were also up. Speaking of all-time high prices, we were looking at MicroStrategy yesterday. Had an all-time high in November, and after on the back of all that big bullish news about Trump talking about Bitcoin being in a strategic reserve or considering it, we noticed that MicroStrategy wasn't moving higher. And yes, I saw the comments, people saying, well, this could be because Saylor is selling off into the good news. Yes, that's possible, but why are there not enough buyers to support this good news? That's just something to consider if you are trading this long term. I'm not at all trying to tell people to get out of positions or into positions, but just watch the chart, because we've seen a similar thing play out in the last cycle. It doesn't mean it doesn't go up and people will think that, oh, this time is okay, the market's going to run up. But that was your Bitcoin all-time high. That was not, and this was the $65,000 top. So you had 65K here, 69K here, and whatever it was in February, something 50. So you had a chart that was like that for Bitcoin, whereas MicroStrategy was basically heading straight down into May and barely recovered into that all-time high. So why would that be the case? Why were people not seeing value in MicroStrategy, which was holding a lot of Bitcoin while Bitcoin was still going up? I'll leave that to the fundamental analysts at the time. They'll probably say things were different. This time might be different. And if this time is different, what has to happen from a technical point of view? Firstly, are closes above these tops. And we looked at that yesterday. It's going to be roughly $45. So, sorry, $450. So if MicroStrategy is not getting above those levels, this would be an interesting one to keep following to see whether we've seen the burst of excitement already in November and whether things are die out, or we start to see another burst of energy and excitement from the public who are trying to get into MicroStrategy, if they're just into stocks, and they keep riding this thing higher. Firstly, closes above 450. And as I talked about with Tesla went down and then it basically broke into new all-time highs. So to learn from those, I will call it mistakes on my behalf, if I'm going to grow as a trader or investor, and maybe you're the same, you want to keep an open mind and just watch the chart. If it breaks down from here, that's to tell us that it's looking likely that we're not going to see that next burst of retail excitement, because all of that retail excitement happened basically through November. But if we do see a break, then we have another next level of retail excitement to head up into new fresh highs again. Do note that that low to the current top is 4,000%. And for that, the previous cycle, you had around 1,400%. So it's basically done 3 times the gains this cycle than what it did last cycle. So some pretty strong gains through there already for MicroStrategy. Next up, we have the crypto data and the altcoin season triggers, the stuff that I don't think anyone is watching. In particular, the overbalance in time and price triggers that helped us with Bitcoin, getting into that at lows, and then again, when before Bitcoin broke out in November, there was another signal of overbalance in time and price. So this signal works really, really well across any market, provided you've done the back testing to see how often it works. So basically just looking at the probabilities. Before I dive into that, quick shout out to our channel sponsors. If you're looking to trade your altcoins, get a little degenerate there, Bybit has a crypto debit card. I'm using that at the moment, pretty decent. Plus you have a lot of savings on that platform as well. Bluffin, you got plenty of other altcoins and degenerate stuff on there, plus it's no KYC. And then of course CoinCatch, and for the Aussies to get onboarded there, you've got SwiftX with $20 of free BTC. Links in the video description will get you those gifts and prizes and all the good stuff down there. So the fear and greed index, we're at extreme greed for at least the next 30 odd minutes. Last week, extreme greed. Yesterday, extreme greed. Last month, extreme greed. Absolutely mental how long this extreme greed has been going on for. But Michael has a video up yesterday just looking at the fear and greed and how long this lasts. You know, I've referred to this quite often on the channel about the extreme greed lasting for roughly 2 to 4 months. I'm looking at it in terms of these extended periods. You can see the previous cycle had 75 days. It dropped out of the extreme greed and then back into the greed and extreme greed for roughly a month after that, 4 weeks. But what Michael's done here is just broken it down into the segments of extreme greed. And then once it drops out of extreme greed, or in this case, greed as well, because that's a lot of excitement from people. Once it drops out of that, then resets the count. So we're trying to find out in an objective manner how much energy people in the markets, all of us, I have greed, you have greed, we all have greed. How long does that generally last from the lowest end to the highest end? And then look for a median, not necessarily an average, but a median. And you've got 28 days here, 31 days here, 27 days here, 31 days here. That's at the peak there in, leading up October, November. We had 45 days, so a month and a half. That was that new cycle top in February and March. And we're currently at 37 days. So he's got here, 8 days to go. That's for the maximum there, 45. It can extend out to 75, but when you look at the probabilities, that's happened once in the last 1, 2, 3, 4, 5, 6, 7 times. So it can happen again. Obviously, the probabilities are lower. And for that to happen, you'd have to double where we are at right now. So 37 times 2 would get to that sort of mid-70s level, which would take us probably out to early February. So can this thing keep running and keep in the extreme greed or agreed as well for that entire period all the way into February. Only the crystal ball has the answer to that. But if we're just working off the probabilities here, you'd probably say somewhere around now or over the next week or so could be where this thing begins to show some sorts of signs of exhaustion, if not already. That doesn't mean that this is the top, because you still had further to go. You had cycle highs here, and this one here you had still further to go. You had further to go in that next move. You had further to go again in the first movement, right? You see you had the next one. So it did drop out, but that was just another good buying opportunity. So as we looked at, or as I said in the intro, we have seen some of the markets just take a little bit of a dive here, single digits against their BTC values. And well, Solana's the only one really holding up. But if you were to see that happen again, if we were to see some sort of correction over the next 1 or 2 months, I'm looking at that so far because none of the data has really changed. The macro picture hasn't changed. I'd be looking at that as a better buy the dip opportunity, even if the prices are higher. Why I say that is because it's a good reset opportunity. So you're seeing the market reset with the greed getting washed out of it, and you now have a starting point. Just like what happened in August, then you had a starting point again in September for the shorter term. But of course, the August is the longer term one here. And you can even look shorter term with the last couple of weeks. You had the 5th with those massive liquidations, and then the 9th as well. That was that $1.7 billion of liquidation. So they're essentially starting points because you're getting a flush out of either leverage, you're getting a flush out of sentiment, which just sort of takes the hype out of the market. And from what I can tell, resets it. It might take a bit of time to come back, but provided you have patience, well, then you just basically ride it out. You're just in a better position because things are not as hot as what they were before. And essentially, as people say, that it's on sale. In terms of where this market could drop to and still be in a relatively strong position, starting from the worst case scenario, which I don't think is going to happen for this correction, you can look all the way down at $74,000. They're those previous tops. Enough on that because I don't think that's going to happen. But the shorter term stuff, we're looking at around 100, 101K, then down to the 50% level of this range so far from the 17th. That's at $98,000. Can you imagine the craze, the fear that would come into the market if Bitcoin dropped under $100,000? It's really just a different number on the screen, but people get a little bit freaked out with that psychological level, thinking things are over. But it's really only 6.5% away from where the current price is. Then there's plenty of other support to the downside. Most importantly, I'll be looking towards these lows where those massive liquidations came in at about $94,000 down to about $92,000. So they're the next two big levels. Because if that's where people got washed out and the price went higher, what happens if we were to go under those levels? That could spell a longer correction than anything above those particular levels. So that's what I'm looking at for BTC at the moment. Now, on to the overbalance in price, something that people aren't necessarily looking at in my books because this is part of Gann's analysis. And we teach a lot of Gann analysis in the TIA premium courses here. Link is in the top of the video description if you guys want to join that sale starting today. And you'll also get the TIA indicator suite special as well if you're on board with that TIA premium membership. And what we're talking about here is the overbalance in time and price. You'd need to see an overbalance in price, which is a price target, and then time, which is an amount of time that is longer than any of the previous rallies that we've seen before. So starting with where we are right now for ETH BTC, the overbalance in time and price would trigger at 0.046. And in terms of time, the longest time so far has been about 3 weeks to the upside. So we're currently in about 5 weeks. So if we are to hit that this week or next week, well, that would meet the criteria of overbalance in price and in time. Now, there's a few more things for ETH to do once it's hit that level, of course, but that's a really, really strong foundation to begin with. And we can see that with Bitcoin, as I said earlier, that's where we got this signal from here. When Bitcoin dumped into August, you had an overbalance in time. That's a long time to get up to that peak in September. So from that low to that top, 53 days, and it ran up $17,500. And so what we're comparing this to is any of the prior moves to the downside. Essentially what this tells us is that you've got more sticking power for the buyers. The buyers are sticking around longer and they are buying it up at higher prices because this did not break down from the anchor point here at the low here in August. You can see we got a higher low, but it didn't break down from this August low. So the invalidation is if it breaks that previous low, then whatever overbalance in time and price you were using on the way up is now invalidated because it broke down from that low. So these are what we've used them for, very, very strong signals to be able to buy the dip. So this signal played out once again at the $60,000 level. So that's just before Bitcoin took off. So really good timing there. And to help us with the bottom, the end of the bear market, then turn around into the bull market, we had a few more overbalance in time and price signals through early 2023, where the time was longer than any of the previous moves to the downside. So the longest time you had before was through January into March, and then again this little move here from June into August, and then these ones far exceeded it in terms of time, and they also exceeded it in price. So that's the power of this particular rule here. We are watching for a 0.046, and ETH did something similar in the previous cycle. Here is the overbalance in time. That you can obviously see is a long time. It's about 12 months to the upside without a break of the low. But within that first period, this movement up did not exceed the largest move to the upside that it had previously done in its bear market. That was 0.017. And so you're waiting for more than a 0.017, and you didn't get it until here. And there's your overbalance in time and price. The market moved down, as I've talked about in the intro. We're also seeing the market moving down at this point in time, which is absolutely fine. I don't think there's anything too overly concerning about that unless it breaks down from some significant lows, which would then reset the overbalance in time and price. But for now, you've got that, we're waiting on that overbalance in price to hit, whereas in that last one, it took a while to hit. It corrected, pumped again, corrected, higher lows, strong movement there. And then you had this big move to the upside, which was, I guess, what people consider the trigger for the alt season. You had this first move here in January, and then you had the bigger move in that March to May period. So a nice altcoin season trigger once again. So we are talking about prices getting corrected at times here. You know, ETH is still down at 3%, still some single digits here on some of the other altcoins, and I'm bringing that up yet again because we're looking at the USDT dominance here, and today's bar is still not playing ball, dropping down below 3.8%. Remember, this is that key area that we're watching for the market to go below in order to trigger this next significant move for Bitcoin and altcoins. And again, today it is not playing ball, and it's at the moment, if this is to hold, that would be a higher low on the daily chart. So we're not on the weekly yet, but still on the daily, and we've got this slow grind. So if you are watching the analysis day to day, you know we are referencing this point to something similar like the January through to May top. I don't want this to happen, and I want to see, I'm heavily long on Bitcoin and altcoins, so I obviously want to see this thing break down, but I can't deny what the chart is showing up here with this grind for now. If this breaks down, great. We're all going to be sent to the moon. Bitcoin goes to 120, 140, 150K. Altcoins go bananas. We look to the next level to the downside. Where is that going to end up? Somewhere around here at about 2.5 if we can get there. Watching a couple of the smaller minor areas around 3.2, but that's still a pretty considerable move to the downside should it break down from 3.8. But again, I can't not look at how this sort of grind happened and how the market really just didn't really go anywhere after that point. So I'm still watching out for that at the moment, and only until this breaks down will I get super excited again. Similar sort of thing is happening for the total cryptocurrency market cap. It's just holding out here, so it's not the end of the world yet. A breakdown below 700 billion could spell a longer correction here, and you don't want to see it go underneath these previous tops at 630. For now, we're just still holding up day after day. The total 3 versus BTC, a down move at the moment. This is on the weekly, so we don't really have too much more to add here until the weekly bar closes. But this was also a positive sign, a bit of hopium, even if the market does plateau out again and pause. This was similar to the last cycle here in 2021. We had a nice big strong move out that took out some of the tops, and that could be the setup that we're just waiting on for that next move to the upside. Solana, bit of hopium. It had a good day, or it's on a good day at the moment. Against BTC value, you can see that it was stronger volume, and the price has actually closed a bit higher, even though it was a down day so far, lower highs, lower lows. It could be the start of something else there, or it could just be testing this low. So what we would know from that is if it came up, got rejected at these previous support levels, turning it into resistance, and that would spell more downside for Sol BTC. As for ETH USD, it did put in that new fresh top by a few dollars and then has had a pullback. For now, the lows here at 3,500 are the key levels to watch for any signs of support. Otherwise, back down to 3,200. Up here is still fine for consolidation. That's basically building for another cause, another case to the upside move for Ethereum versus USD. And finally, Solana USD. Probably did them the other way around. Solana USD, there's still some hopium in here. I still see hopium in each of these charts, provided this holds up here at 0.002 on the weekly chart. Sorry, I know I went back to Sol BTC, but this one's an important one to look at. It didn't close underneath 0.002 for this entire move from December top, and you had that March top. So this entire period, this could be, well, it's a consolidation. It could be accumulation. It could be distribution. We don't know yet. Once you get a breakout and a confirmation, that's accumulation. A breakdown, that's confirmed as distribution. But through this entire period, there was no weekly close under 0.002. So that is now on red alert as we get rather close to 0.002. And as I said, Solana USD, there's still some hopium up here as it consolidates above these highs of $200 and ideally above 190, which are the previous tops, and also the current 50% level of the move. And you still have, for now at least, lower volume on the moves down, on the selling moves, than you do on the buying move. So that's still a positive outlook for the bulls that are chasing more gains for Solana. Thanks again for watching. Check out the links in the video description if you want that debit card on Bybit or no KYC exchange for Bluffin. I'll see you guys back here. Let's put on a chart here. Back here at the next video. But until then, take care and peace out.